Welcome to another S&P Futures day trading recap on an Apex evaluation account. Apex's massive sale is still going on. From now until March 21st, you can sign up for your own Apex account with my link in the description and use my coupon code for 80% off the first month and 80% off all recurring months. As I documented in my daily community tab post from yesterday, I experimented a bit with different price action setups and made some important adjustments to my entry and risk rules. Here's a quick summary. 1. I'm relaxing my signal bar confluence requirement. I got through a little more of Al Brooks' trading course, and he considers all candlesticks where the wicks are longer than the bodies as dojis, and he doesn't distinguish between bearish and bullish dojis. With this in mind, I'll only consider not taking a trade if the signal bar is a full-bodied candle that is against my intended trade direction. 2. When price is very far from the EMA, I noticed it has a high chance of getting pulled back towards it. So I'll start taking setups from outer trend lines towards the EMA, even if it's against the trend. 3. It's too difficult to set a maximum dollar risk per trade since my risk really depends on the size of the signal bars. So instead of setting a max risk per trade, I'm updating this rule to set my contract size to be based on the size of the signal bar. If it's less than 15 ticks, I'll use 2 ES contracts. If it's 15 ticks or more, I'll use 1 ES contract. After a pretty bullish reaction to CPI, I see price break out of a bullish channel and bounce from the EMA. Fading a counter trend breakout is a high probability price action setup, so I entered what I thought was a failed second entry short setup. I used a limit order because the signal bar was a bit large and this way I could have a smaller stop loss. This was honestly a great setup that followed all the price action rules, except for the fact that I miscounted the legs and this actually wasn't a failed second entry short. It was more of a first entry long that still played out beautifully, so I'll take it. After expanding the bullish channel, I see that once again price had another counter trend breakout and I tried to fade it again, this time with a second entry long setup. I knew this was a bit risky given how strong those bearish bars looked before I entered, and I quickly get stopped out here for a loss. Shortly after I get stopped out, I see a huge bull bar form and realize that my trade thesis of fading the counter trend breakout was going to play out without me, and I immediately hot back in long. I guess technically this was a third entry long setup. This signal bar was so big that even entering with a limit order inside the signal bar still required a very large stop loss, and I adjusted my take profit to be 1 tick more than the stop loss to maintain the 1-to-1 reward to risk ratio as per my trade rules. Thankfully, my trade thesis based on price action rules plays out perfectly, and price starts pumping upwards and reestablishes the uptrend. This win more than made up for my last loss, and I was pleased that my instinct to jump back in was correct. I get another long opportunity when price forms a very strong bull channel, and I take a failed second entry short setup to try to ride the bullish momentum back to the high of day. Just in case price would form a double top and reverse back down, I set my profit target at 1 tick below the high of day to ensure that my take profit order would get filled. This precaution turned out to be unnecessary, as price pushes strongly through the high of day as the bullish morning continues. After a new high of day formed and price started to come back down, I knew there was a chance of a reversal here because new extremes were made after the initial breakout of the bullish trend. When price broke out of the downward trend and got rejected by the EMA, I decided to go short on a second entry short setup to fade the breakout. After I enter, I get a little nervous that price might form a double bottom at the most recent pivot low and consider moving my profit target up a little. But seeing all the red bars gave me more confidence in the short, and I decided to keep my more aggressive target below the pivot lows, and I'm glad that it does hit for my fourth win of the day. So today was the first day trading with my updated rules, so it's definitely too early to suggest that I finally figured it out, but I do think that I'm taking steps in the right direction. I felt that I was able to see the market clearly today, as I scalped the long setups on the way up and even scalped a short setup when the market started to reverse. Entering trades off failed second entries gives me a lot more flexibility to take trades when other conditions are met. It also presents a lot more opportunities for entries, which just makes it more fun to trade. Overall, I'm starting to feel a lot more comfortable with price action scalping, and I'm pleased to report that after about 2 weeks of learning a brand new strategy and experimenting with different setups, this eval account is back to 49,986, just under break even. I plan to start taking this account more seriously now that I kinda know what's going on and won't be experimenting anymore. We'll be strictly sticking to my risk rules from here on out, and we'll see how long it'll take to pass this evaluation account in a responsible way. So hope you stick around as the real evaluation now begins. As always, thanks for watching. Please leave a thumbs up if you enjoyed, and subscribe so you're notified of the next time I post a trade recap. In the meantime, I'll continue posting daily profit and loss updates in my channel's community tab.